Hey everybody, and welcome to my channel. My name is International Stacker and I travel the world buying gold and silver and taking you on those adventures. If you're new to my channel, please subscribe. Look for the red button down here if it's red. Or if you're a subscriber and it's red, it means YouTube's playing games and unsubscribed you. So please subscribe and like and comment because it helps me fight the YouTube algorithm and get my story out there and wake up more people to why gold and silver is important. And also a big shout out to Gold Royalty Corp for sponsoring this video. Now, many people recently have left comments about the spot price of gold and silver. And wow, I'm filming this Monday morning in a hotel in Pennsylvania, and it looks like silver is getting smashed down again. But I'm not worried, and I'm going to tell you why you shouldn't be worried as well.
One stacker on a journey to find silver. International Stacker.
As a matter of fact, not only is silver spot price getting smacked down, but you can see here the S&P 500, we're down quite a bit at its high earlier in the year. We're at 4,800 essentially. Now we're at 39. So essentially, a 1,000 point hit. If you look at the Dow Jones at its highest, this is only year to date I'm showing. We were up around, what is that, 37,000 or so, and now we're down around, what is that, like 32,000. So S&P 500 is taking a hit. Dow Jones is taking a hit. But folks, don't panic, and I'm going to tell you why. Additionally, you can see that there's a million articles out there talking about home prices. What's going on with the home prices? Used car prices are on the decline. And if you guys all remember, used car prices were out of control because of all the chip shortages, etc. As a matter of fact, mortgage demand has dropped to its lowest level in 22 years. CNBC, NY Post. I mean, this is mainstream information. Real estate market crash predictions. All you got to do is search this, and you'll see major entities talking about the pullback in real estate, the pullback in used cars. Ladies and gentlemen, historically, more millionaires are made in recessions and depressions and other types of pullbacks than any other time in history during times of rises and success. No, it's during pullbacks and recessions, and there's a million articles here on historically why that's true. But I don't care about all that. I'm going to share with you why that's important and how I intend on being one of those people, and I believe you can too. I truly believe that every day the spot price, and let's go back here, stays low or pulls back is another opportunity for us. Now, please remember, I'm not a financial advisor. I'm sharing with you my journey and what I'm doing. But I truly believe that we're going to, in not the too distant future, we're going to look back and think about how cheap silver was under $30 or how cheap gold was under $2,000. I really believe that time is coming near, folks. And if you look back at this historically, you're going to see there's one more green year than negative year, and the green years are a much bigger percentage movers up. I do feel a sense of urgency here, but it's also important to be responsible. Do not go into debt to stack. Let me repeat that again. Do not go into debt to stack. Now, what will I do when this move that I think is going to happen and that many expect is going to happen? What am I going to do when that move finally happens? And you can see here, I just switched to this chart, the historical, and you could see that move has happened twice in history. It's been nearly $50 actually twice in history. Once in the 1980s with the Hunt brothers cornering the market. That's a whole nother video there, okay? But anyways, 1980 and 2011. Now, if you correct this for inflation, silver has already been triple digits, guys. If you look at what, $48 from 1980, that's equivalent to 172 of today's dollars. If you look at, what was this, $49 in 2011, that's equal to $64.55 today. Thus, silver has already been triple digits already. And if this doesn't show you how undervalued it is, I don't know what to tell you. And look at this. If you go, well, 1980 was the Hunt brothers doing it, it's market manipulation, not going to happen again. Okay, so even if we took out 1980, in 2011, it hit the equivalent of today of $64. 64. And what is it right now? 1841? Please. Now, what will I do when silver gold start moving? I will start to liquidate percentages along the way and shift them into distressed assets. I truly believe that only a fool rides it to the top and does not take profits along the way. Rides it to the top and does not take profits away. Am I ever totally going to get out of gold and silver? No. But when we see the next meteoric rise or gradual rise or sloped rise, whatever that ends up being, I'll take percentages again along the way and shift them into distressed assets. Now, what kind of assets am I talking about? It depends at that time what's going on. It depends on the opportunity at that time. It could be real estate, right? We're just looking at these articles up here of the real estate market falling or maybe a pullback. Some think a pullback up to 30% is popular in real estate. So maybe at the time that the next rise happens, I pull out, put into real estate. Maybe at the time real estate's not a good buy. Maybe that time I look into companies that I think are going to weather the market turbulence that's most likely ahead and put into those assets. I can't tell you exactly what I'm going to do because it depends on the sandbox we're in at that time. And by sandbox, I mean the rule set. But only a fool rides it to the top and all the way back to the bottom. So I'll take percentage profits along the way and shift them into other assets. Now, when I'm looking at companies to invest in, especially during such instability, I look at companies that are risk adverse, that have big backing, have a good operating model. Okay. And that's why I really like royalty companies. Now, royalty and streaming is an entirely different way of capturing the upside of mining activity. Okay. It's not the traditional way where you're buying stocks in a company. And in many ways, it's really de-risked from exposure, which again is why I like royalties during normal times, but I really like them now. And if you look at this little demonstration here, and this is Forbes I'm pulling this from. This is to start one, you start financing. Okay, so it's a royalty company, upfront payment for a royalty or a future stream to the operating company. Then that helps the company get going or start a new project or whatever they're trying to do. And then the production side, payment for stream delivery to the operating company, and then the royalty stream or the royalty or stream delivery back to the royalty company. Generally, royalties limit the holder's exposure to exploration, development, operating, sustaining, or reclamation costs typically associated with operating interest in a mine. Okay. So the reason why it's beautiful about the royalties is you can invest in a bunch of different projects and you're not necessarily tied to that. So what does that mean? It means that really royalties are basically just a payment to a royalty holder by a property owner, okay? Or a project owner. It could be the property owner or project owner. Royalties are typically based on a percentage of the minerals produced and the revenues or profits generated by the property. So royalty companies don't have to mine for gold themselves. They can just invest and fund the best projects available, which I love. So uh, royalty companies, again, they don't have to do their own projects, exploration, take all those risks on. They just find the companies that are doing that. They find the projects they like the best and they invest in those. To me, it really protects you in those regards. Now, when I speak of opportunities, I believe there might be one right now. It's a company I've covered before, Gold Royalty Corp. And here's their chart right here, which is currently trading at half the IPO round, okay, after a major pullback. So we just looked at here the major pullback in the entire market. And this right now is at about 253 as of today. Market's, I think, about to open here shortly. But that's roughly half of what the IPO round was, which was around $5. And you got to remember, when it was $5, two self-made billionaires invested in it. Eric Sprott, I know you know that name, and also Rob McEwen, okay, who's one of the biggest gold entrepreneurs ever. And then there's other big, obvious institutions that participate and put millions of their money at their own risk. But the beautiful thing here is some of those have 3-year lockups, meaning that money's locked up for up to 3 years, even if they wanted to pull it or shift it or whatever, okay? So today's shares are trading for, what, 248, so just barely sub 250. And that means the price would nearly have to double just to get back to its par. And on top of that, H.C. Wainwright & Co. Just put out this price projection on July 7th, where they have a target of $8.50. $8.50. And right now it's, what was it, 249? I don't know, guys. I don't know what you're doing. But that's really implying 240% upside for the next 12 months. And again, The reason I share these videos is to share with you what I'm thinking about doing personally, or what I am doing personally, and how I'm trying to leverage uh, my investments and what I'm doing in my life to benefit later in life. Now, if GROY, GROY, which is the ticker for this company, received the same valuation metrics as its peers, its price would be double or triples today's price. And while they have limited operating exposure, royalty and stream holders do benefit from any resource expansion or upside generated by exploration success or mine life extension. So as companies continue to grow and do better and better, a royalty company is always going to benefit from that. Now, remember, buying a mine is very capital intensive. Mining companies could finance construction by issuing shares, but investors don't like that because it can dilute the shares. So, a royalty agreement can eliminate the potential for share dilution. Okay, that's a big deal. It's a business model that allows the company to potentially generate revenues whether the gold price is rising or falling. And that's an advantage with royalty companies. It really sets a fixed price for mining output. So as a result, it's actually not unusual for big names or small or medium names in the royalty industry to outperform both the price of gold and gold miners. And here's what I like about this company, they have 190 royalties. Look at that basket there of 190 royalties, and it's all over North America, Canada, and South America. So it's very diverse, spread around through multiple countries, which again, to me, it really helps with the risk. And this can show you here what the commodities are. And again, you guys know me. I love when things are more than just one commodity. So a lot of these AUs, periodic table for gold, obviously. AG is silver, so several of these are silver, right? And then CU for copper. So again, I love when projects are diversified. Oh, and look at this. Very interesting there, okay? Now, royalty companies typically hold highly diversified portfolios. So again, this reduces the concentration of risk, okay? If one of the properties stops producing precious metals, the royalty company can lean on the other projects. So by owning shares in a royalty company, investors have exposures to a bunch of different companies across the whole industry. And here's a slide I wanted to show you. It's just some of the big projects they're working on. So you see here they have 198 royalties, 8 are royalties on producing assets, 20 royalties on assets in development, so that shows longevity, 30 advanced exploration royalties, and then 140 the early stage exploration stage. So there's a lot of potential for here to do well and to keep going. These are 3 of their biggest kind of flagship projects. So you got the Odyssey project, which is Canadian. You have the Rim project, and then you have the Côte de Gold project, okay? And that is French. Why do I know that? Because I went to Côte de l'Ivoire, which is in the West Africa. So I just put that together right now. That's funny. Anyways, guys, just my thoughts. I'm interested in your thoughts. Give me comments, give me feedback below. What do you think about the market? What do you think about the stock market? What do you think about spot price and manipulation? What do you guys think about falling home prices? Do you think manipulation will eventually break 3? I do. And what do you think will happen when that happens? I'm just curious on all your guys' thoughts on that. So let me know in the comments below. Hopefully it doesn't become too much of a dumpster fire, but I'm interested in seeing that. And again, thank you all for watching. Please like, comment, subscribe, and check out some other videos. Like I have videos buying silver in the African market, getting attacked by pirates, full stack videos, Saudi Arabia. So a lot of very cool videos that, especially if you're a new subscriber, you might not know about. As a matter of fact, I have over 1,000 videos. So if you see one you don't like, don't worry. There's probably 50 more you will. So thank you for joining me on my journey, you guys. You make this fun. And am I going to meet one of you here in Pennsylvania? I'm here for the next 2 days. Am I going to meet one of you? Are you going to claim the custom crab challenge coin? We'll see if anyone can pull it off. And I guess I'll say, oh, here we go. CYOTNO. Catch you on the next one. Woo!
One stacker.